Okay, everybody, welcome. It's 3:30 p.m. Central Time on Monday, March 26th. Thanks, everybody, for coming to the event today. My name is Patrick Zielbauer. We'll go through some risk stuff briefly here and take any questions related to risk, and then we'll get right into the presentation. So thanks for coming. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, only fund a futures account with risk capital. That means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle and pay your bills and so forth. If you have any questions about where you may fall on the risk capital curve, so to speak, please feel free to have a discussion with your representative in our office about that. That's something we can definitely talk with you about. Infinity and its representatives will speak very candidly with respect to risk. It's not something we sugarcoat. We want to set you on the right path from the get-go, but we are more than willing to have a discussion with you about whether or not this type of trading is for you or could be for you. Another thing to mention, in our industry, the phrase day trade margin gets thrown around a lot. Be extra careful with the use of day trade margin, even if you use overnight margin, for trading in terms of how much money you have in your account per contract you trade. You're still in many cases using significant leverage. So when you use day trade margin, you do amplify that leverage, and that's something you want to be conscious about because leverage is a double-edged sword. Okay, it cuts both ways. All right, feel free to ask any questions you may have throughout the presentation or to your representative. Okay. My name is Patrick Zielbauer, and I have been an AP or associated person of Infinity Futures for what seems like an eternity, but it's been about 14 years. And in that time, Infinity has used a lot of different trading platforms and charting software programs, data feeds, clearinghouses, et cetera, et cetera. And as most of you know, the vast majority of our business and sort of the direction we have decided to focus has been on Infinity AT, which is our execution platform, and Sierra, which is the charting program we employ. So this window here is called the Infinity AT Dome, or depth of market screen. The vast majority of our clients trade on this platform. You can also place orders directly on the chart, but if you just want a nice light execution software that's not going to weigh down your computer or get weighed down by Thinkorswim or whatever else you might be running, you might be a good candidate just to use the Dome. A lot of our clients only use the trading Dome. Because they don't want to learn a new charting program right out of the gate. That's okay. If that's the way you are and that's the way you want to start, no problem. We do make our charting optional. So if you're not familiar with the pricing that we offer, the charting, which is what you see in the background, is free if you do 10 round turns every 30 days. So a round turn is like one buy and one sell. So if you do that 10 times in 30 days, then we waive the fee we would otherwise charge for the charts, which is $20, $19.95 to be exact. So most of our clients don't pay for the charting because 10 round turns in 30 days is a pretty modest value, for someone who's interested in day trading or even trading very modestly. But we do make it optional. So if you want to opt out of it altogether, you can do that too. Obviously, we discourage that. It's a great charting program, but if you're 100% tied to what you're using, you don't have to use it. But after all, you are here today, so it means you probably have some interest in our Sierra chart program. So let's sort of move right into that. And before we get into the details, what I would like to, for those of you who are relatively new or unfamiliar with the way I present and just my overall outlook on the market and trading, is I believe that based on my experiences, and I don't have empirical data to back this up, but based on my experiences in being on this side of the business and dealing with people for as long as I have, I believe that decision fatigue is a real thing. And decision fatigue is, to put it, in an oversimplified, explanation would be, you only have a finite amount of decision making you can do in a day at a high level. And I believe that that's real. And I believe that in trading, that idea gets brought to the forefront very quickly, and a lot more so than in other industries or lines of work. So in this day and age where charting programs have gotten so advanced and you're getting more and more data and you're watching all these videos at nighttime and in the morning and the news and earnings and Twitter and all this stuff, there's a lot of information being thrown at us, and there's only so much you can absorb at a high level. And part of the thing I like to do with Sierra, which is one of the reasons I think it's a great program, is Sierra allows a person who is not a developer by trade, like me, to do some things that you would sort of think you'd have to be a developer to be able to do. And what I mean by that is it lets you do some neat stuff with respect to taking data from one chart or even just a data point from one chart and putting that onto another chart. And the objective of doing that is to whittle down the amount of charts and information that you're sitting there staring at, even if you think that that does not use up your mental capacity, on a day-to-day basis. I believe it does. And that's why I put so much effort into trying to train people how to use this program in a way that allows them to consolidate their view and just not have as much stuff running. When you're looking at a charting program and you've got 12 different time frames and each chart has 14 indicators on it, and then you've got 14 markets you're following, it's just a lot of stuff. How do you make decisions, in that environment? That's what we're trying to help you sort of whittle down. All right. So some of this stuff, well, almost all of it is really my opinion. My opinions about the market have been formed over the years of dealing with different educating partners of ours and my own clients. So I have my own viewpoint. These are basically my viewpoints, but I encourage you to use this data and use it to do something that you would help you simplify your point. Okay. I'm not going to take anything away from, what you believe about the market, but if you find some value in some of the stuff that I look at, great. If not, no harm done. All right, so I'm going to get into to what we're looking at here on the screen, and then I'd like to do a couple of examples, but what I'd like to do right now is I want everybody to think. You don't have to write anything in there yet, but I'd like you to start thinking about a couple of bits of information of like a bigger time frame or a different market that you would like to see on a chart that you look at the most. So pretend that you're looking at your main chart setup and you've got 6 or 8 charts open or something. And there's a couple things on each one of them that you are typically looking at before you get into a position. What are those things? I want you to start thinking about it because I'm going to try, hopefully at the end of the presentation, to take some examples from people and show you how you can put that information on one screen in an effort to pare down the amount of stuff you're sitting there looking at. Because usually what I find is that people don't actually look at every aspect of all those time frames or markets. They're looking at 1 or 2 things. So let's take those important things. Let's force ourselves to inventory the decision-making process and only use what we need instead of looking at everything or trying to look at everything. All right, that's what we're after. So start thinking about that now, because after I go through this example, I'm going to start asking everybody here for some input. All right, so hopefully we can get on the right track. Victor, this is the equivalent, I guess you would say, of level 5, meaning the charting program, for those people who are asking what that means, Sierra Chart, if you were to go directly to them and lease their software, they have levels 1, 2, 3, 4, 5, etc. Level 5 is the highest one. It's the one that includes things like profile and numbers bars. That is the one that ours includes. So we do offer that stuff as part of our version, Victor. Okay? All right. So what we have on the screen here are 4 different charts, all the E-mini S&P. So I'll just use the top 2 are E-mini S&P. The bottom left is bonds, okay, ZBM8, that's June bonds. And then in the bottom right is the yen, all right, that's the June contract. All right, these are 5-minute charts. This one in the top right is a 5-minute chart. The one in the top left is a daily chart, so that's our big time frame. In the top left chart on the daily, we've got some moving averages. I'm going to stretch this out so we can see these titles. This blue one is a daily 34-period EMA. This one here is a 20-period SMA. And this is a 50-period SMA, simple moving average. All right, so a lot of times when people look at daily charts, they look at crossovers between the 20, 50, and the 200-period moving averages. I don't have the 200 up here. We could easily put it up here, but for the sake of this demonstration, it's not. Another thing that people often look at, and it doesn't have to be 34-period, but sometimes people will look at an 8 or a 34 crossover or a couple, whatever number you want. This is just an example. So these are all on the daily chart. All right, in the bottom left, this is just bonds with no indicators. It's a line on close chart, super easy, just basically tracking the price. In the bottom right, we have the yen, same thing, except there's some gray lines on there. I'm going to explain what that is in a minute. And then in the top right, the S&P chart, the 5-minute chart up here, this is sort of like our destination for all this stuff. And we're going to use this as kind of the screen we would be looking at to make our entries, and this would be where your eyes are the majority of the time. All right. Now, one thing that you're seeing is you're seeing these gray lines or these gray columns here on the chart, both on the top right and the bottom right. And what those represent at the bottom right, this is the yen. You're seeing a gray highlight when we get 3 consecutive lower lows. So I'll show you how to code that because it's a really cool function inside Sierra. But the idea here is that I want it to be notified when the yen is breaking down. All right, the reason why that is many of you may be familiar with, is you can see the relationship between the yen and the stock market is often inverse. The yen is often considered a flight to quality instrument, and when the stock market's going down, a lot of times the yen is going up. Not all the time. That relationship does decouple from time to time in sometimes glorious fashion, but in this case, it looks pretty direct, or inverse rather. So you see the yen breaking down, stock market's going up. So when I was making this, I was saying, okay, I want to know automatically when the yen is breaking, and I'm going to define breaking as 3 consecutive lower lows on a 5-minute bar. But I actually wanted that signal to be displayed on my 5-minute S&P chart. So by looking at the 5-minute S&P chart, I can actually know when the yen is going lower without looking at the yen. All right, that was the point there. I'm going to correct a little mistake I can already see on one of my overlays here. So I'll come back to why this is in a second, but just bear with me as I make that change. And it's now done. And basically what we're looking at here on the 5-minute at the top right is you see this little light salmon colored ZB. That is just the price of bonds. So that's the price of bonds that's being overlaid from the bottom left chart. And then down here, you're going to see a blue number that says 6J. That's going to be the price of the yen being overlaid from the bottom right chart. Okay? Hold on for one quick second here while I refresh something. Bear with me just one quick second. Okay, sorry about that. Okay, so I've got the yen and I've got bonds. I've got dotted lines that represent both of those values, and then I've also got the gray columns. All right, and we are recording this, yes, so it will be up on YouTube within a day or so. All right, and then if we expand the scale here, you're also going to see these values up here. So this should look familiar because you can see that they're being overlaid from the daily chart on the left in the top left side. So what this is basically showing is on the 5-minute, I'm actually getting those daily moving averages. So it all of a sudden becomes a little less critical for me to look at the daily chart all day. If what I'm looking for is the market approaching these values or these values beginning to cross, it is not necessary for me to look at the daily. So a lot of times what happens is when you start to get familiar and you start to trust the program to do this all properly, you can actually just minimize these other windows and you just leave this up like this. And what you end up with is you end up with a screen that has only the data points that are necessary and nothing more. And what I would like to do today is to demonstrate to you how someone can do this. So we're going to go through some examples of basic stuff, and then maybe a couple of more complex examples, and then obviously I'd like to take some input from everybody here. So I'm going to maximize these again here in just a second, and then I'd like to go through some of those examples. There's another thing that I plan to also talk about. So and we talked about this a little bit last week too, but it's such a critical part of the program and it's also relevant in this context, and that is the ability to draw zones like lines, or I use what's called an extending rectangle that kind of looks like this. All right, on one time frame and have that show up on another time frame. That's not exactly using this study price overlay study, but it still is very relevant. So I plan to show you briefly how to do that here again today. All right, so let's start with a brand new file. So I'm just going to go to File, New Chartbook. All right, and let's start off by just opening up a couple of charts. So I'm going to do ESMA, which is the June S&P. And so that's going to open up my default is a 5-minute time frame, so that's what we're seeing here today. All right. Now what I'm going to do is make this a daily. So one quick way to make a chart a daily chart is just to left click anywhere on it, and you'll see right up here at the header where my mouse is, if I just type 1D, you'll see the text show up right up there. Push enter, it's going to make it a daily chart, and I'll just zoom this in a little bit. So here's a daily chart of the E-mini S&P. All right, and then what I'll do here is duplicate this chart by right-clicking and selecting duplicate chart, and I'll just tile these on the screen like this, tile vertically. On the right-hand side, I'm going to make this a shorter time frame. So let's make this a 5-minute chart. So I'll just click anywhere here. You'll see the text show up here, but you don't actually have to click up there. 5M, enter, and it's going to reload the chart as a 5-minute chart. So now we have a daily on the left and a 5-minute chart on the right. All right, so the next thing that we're going to do is go to our, what I'm going to refer to as the source chart. So for the daily, let's go over here and right-click and choose Studies. And let's add a moving average. We'll just do something really simple. Okay, we'll just do a single moving average exponential. Click on Add. And in the settings section, we can confirm the numerical input. So I'll make this a 34-period EMA, okay, on a daily time frame. So if you just apply it, you'll just get the line like this, and you can have the value area display, or the value displayed. So to configure things like labels, you might have recognized that from my other chart book. You go into Settings, and in the Subgraphs tab, there's something here called a name label. And if you check the name label box, what it will do is if you don't enter your own label, it'll use whatever is right up here. So notice I just push apply, and you're going to see AVG shows up. That's because this is the average. This is the moving average. So it's displaying that text. However, if you want to identify this a little bit more clearly, like I do, you type something in the short name right here. So in the short name field, I'll just type in D34 EMA. So this is a way for me to identify, as I'm going to be overlaying this line onto other charts, daily 34-period EMA, push apply, and you can see that that shows up there. When you put labels on lines like this, it becomes useful to create some space between the current candle and the y-axis. And the way to do that is to use the scroll bar, or excuse me, the scroll bar at the bottom of your of the chart with your mouse, or the wheel on your mouse. All right, once you have a desired amount of space in there, just right-click and choose Lock Fill Space. The way that you know Lock Fill Space is engaged is there'll be a capital L in the very bottom right corner of the chart window. So when you look down at a chart and you see space in here and you're wondering, is the market going to catch up and move past that, or what's going on? That's what you're looking for, the L, Lock Fill Space. All right. Okay, so now what do we do? So from here, you can add additional studies to the daily chart, which I will go through in a minute. But for now, what I'd like to do is show you immediately how to overlay this study onto the 5-minute chart. So what we're going to do in this case is we're going to go to the 5-minute, which is what I will refer to as our destination chart. Right-click, go to Studies. So when you go to the Studies window, you're going to be looking for a study that's called Study Price Overlay. So Study Price Overlay is not a typical study like a moving average or volume where you can just apply it and then hit OK and then it just does what you want. There are some inputs here because the chart has no idea what we're trying to overlay. Are we trying to overlay the main price graph? Are we trying to overlay one of the 85 studies we have on the chart, hypothetically? We have to provide some inputs here. So the way that we're going to do this is select the study, click Add, and then go into the Settings section right here. All right, so when you go to the Settings section, you're looking for a section up here called Settings and Inputs. And some studies in Sierra will have lots of inputs. For example, TPO profile, otherwise known as market profile, volume by price study, which is also known as volume profile. Some of these studies have lots and lots of inputs. Some of them don't have many at all. One of the things that you'll find about the Study Price Overlay study is that there are a fair amount of inputs and it can be a little intimidating, but you really don't have to do anything except change a couple of them. In fact, the majority of the options you see here on this page, I've actually never changed. I don't even know what they do. So don't be afraid when you look at a long list of inputs like this. There's not a lot that you need to manage. All right, now I might be foregoing some of the functionality by not delving into it further, but just like most of my clients, I do try to keep things as simple as possible. All right, so the first and most obvious thing here is you click on this first input that says Study to Overlay, and then you'll see this thing that says Input Value. So when you click on this first input, you'll see these two drop-down menus show at the bottom of the screen. And the one on the left is going to be a drop-down list of all the charts that are in this chart book. So the daily is chart number 1. You can see the identifying number in the top left corner of each chart. So the daily is number 1, the 5-minute, that's number 2, etc. So once we start to have lots of charts open in this file, there's going to be more of these in here. But for now, we're going to be overlaying from the daily. And then this one over here, this is what from the daily chart are we going to overlay? Are we going to overlay the main price graph? Or are we going to overlay something else? So in this case, we don't want to overlay the main price graph because we're looking for not the price, but we're actually looking for that moving average. And that's what we see in this list. So this drop-down list will be a summary of all of the studies that are on the daily chart we've selected, including the main price graph. So right now we only have one other study, so there's only one other thing in this list. So we're just going to choose moving average exponential. And there's a few inputs here that we might want to look at, that we will have to look at. But for now, before I even do anything, I just want to push apply so you can see what happens. All right, so when I apply it, some strange things happen. Number one, we get what appears to be a blue straight line. It's showing at the bottom of the screen where we would otherwise look for, say, a moving MACD or a stochastic. So it's clear that we need to make some adjustments. I actually also see this AVG. It's kind of hard to see, but you see it says AVG down here, which is that average thing we were looking at earlier, and you're kind of wondering, well, wait a second, why isn't it put our label there? All right, I'll explain that in a minute as well. The first thing we're going to fix about this is the region. The chart region is where on the chart do you want the study to overlay. The charting program does not know that we want this to go in the main price graph. It assumes that we want to put it in the next panel below. That's why it puts region 2 here. So first thing we're going to change is change the region to 1. All right, so I'm going to apply that, and you'll see an immediate change, right? Now we're seeing the line show up at the bottom, at the top. That panel at the bottom, which we will call region 2, is gone. And the chart has kind of flattened out to force this indicator to be displayed. Has anybody ever tried to put a very long-term indicator on a short-term time frame and seen the chart pancake out and become unusable? If you ever try to put like a 500 period daily or a simple moving average or something on a 3-minute chart, oftentimes what you will see is that value is so far away from the current price that the chart is not legible because the charting program is trying to force the indicator to be visible. All right, that will happen here frequently when you're using this study, especially when you use values or you have values that are far away from where the current market is. So the way to fix that is in this scale option right here. There's a button called scale. All right, you're going to choose same as region. So what this basically means is that the line's going to be there, but the chart is not going to force it to be displayed until it becomes relevant. So in this case, if the market were to rally above 2,700 and it were to expand like this, eventually we would see it like this. So the line is there, but because we chose same as region, it's not forcing the chart to display the value. So far what we've done here is we've selected the study, we've picked the correct chart, we've picked the correct study off of that chart. All right, we've chosen the correct region. All right. So we're getting there. Now, from here, one other obvious thing that we've talked about a moment ago was the label. All right. So the label is going to be this AVG option up here. All right. And there's an option under here that says it says always use short names from source study. So this defaults to no. This really should be yes by default. For some reason, it's not. So you can set it that way. But what I'm going to do is change the value from no to yes. And when we do that, we're going to get the correct labeling that we're looking for up here at the top. All right. Okay, hold on for me 1 second, guys. I just got to make one little adjustment here. Bear with me. Okay, sorry about that. Apologize. All right, so let's go through. I want to go through a couple of other things here. Let's go back to our main chart book here just for a second. All right. We did one example of these moving averages, but I want to show two other overlay techniques that actually don't use the study price overlay study. They use another study called overlay single line. And let's go through those. I know it sort of veers off topic, but it's so relevant that I like to cover it anyway. All right. And what I basically mean here is you can use study price overlay to overlay other markets onto the market or the chart that you're looking at the most. So for example, if I want to look at the yen or bonds or crude, I can use study price overlay to get those studies onto my 5-minute S&P chart. But there's actually a much simpler solution using a study that's called overlay single line. And I'd like to demonstrate how to do that because, again, it's not using the exact same study you see in the title of the webinar here, but it's just as relevant. All right, so let's open up a new chart. And I will get to the questions here shortly, I promise. But I want to get through a few of these here before we go. So CLM8 is going to be the current June contract for, oh, actually, you know what we could probably do? Yeah, we'll just do CLK. That's actually the front month, May crude. Okay, so we've got CLK8 here, and it's going to download some data because I haven't looked at this contract here so far. So we have 65.50 is the current price. And what we have the ability to do with this particular study is get that open, and then we can use a different study here that's called overlay single line. Okay, so there's a couple different choices here. There's overlay bar, there's overlay non-sync, and then there's overlay single line. Overlay single line is just if you want to overlay the market as one line, and you're using the same time frame on both charts. So these are both 5-minute charts. So I'm going to use overlay single line. Overlay bar is if you want to overlay it as a candlestick chart or a bar chart rather than a single line. And then non-sync is if you want to use two different time frames. All right, so in this case, I'm using the same time frame, 5-minute. So I'm just going to choose overlay single line, push the add button. And in the settings section, this one is relatively simple. It's basically asking you what chart number do you want to overlay. And we're looking for chart number 3, which is crude. So I'm just going to pick this from the dropdown, put it in region 1, and then push apply. Oh, you know what? Did I just put that up? I'm sorry. I just put that on the chart we were already on. Oh, I'm sorry. No, I actually didn't. Okay. So if we go to Rufus, good question. I'll cover that here in just a minute, okay? All right. So we can see chart number to overlay is number 3. That's the crude chart over here, CLK8, 5-minute. And you're going to see that line sort of show up here like a green line with not a lot of information on it. So what you can do to fine tune this is go into subgraphs. We can choose a color. All right, sometimes I like to, when I'm doing an overlay like this, I will sort of mute the draw style so it's just not so to the front, so to speak. And then in the value label, you can put the value here like that. All right. And ultimately what we're going to have is we're going to have just that line show up on the right-hand side. And what it allows you to do is minimize the crude oil chart like this and just look at the 5-minute chart. So we can at least see where crude is. All right, now I know the market's going to close here in about a minute, so we're going to lose sort of our ability to see a live feed, but we can still work through this process. So this is the same thing that I did on the other chart file that we were using the bonds and the yen as an example. So this is just crude oil instead. All right. Okay, now let's actually, I'd like to do an example with the yen as well, because I would like to show you how we did that color background based on alert condition and how we overlaid that. So let's go ahead and bring up a yen chart. I'm just going to go to find symbol. Just do 6JM8. Okay, so here's the yen. And the way that we did that code is I went to right-click studies, and we're going to add a study here that's called color background based on alert condition. So this is where things can sort of go off the rails for those of you who've never seen this, this type of presentation before, because it can seem a little intimidating to sit here and have to learn that these basic coding functions. They're really not very difficult. All right, I'm going to do a really basic one here that shows you a couple of different unique aspects of how to use Sierra. And then there's entire webinars that we've done and videos on our YouTube page that detail examples of this, and we're certainly happy to answer questions as well. All right, so color background based on alert condition. In the settings section, we're going to pick a color. So I'll just do like this light gray. And then in the alerts tab, I'm going to put in a code. So when you're looking for consecutive lower lows, you sort of have to decide how far back constitutes a breakdown. So for me, I was using 3 lower lows, but you could go further back if you wanted to. And one way to just start this would be to use the letter L, which stands for low, and you use less than L, and then you put a -1 in brackets. So what this code means, and there are only a few operators like this. So for those of you who are unfamiliar with Sierra, there's H for high, V for volume, L for low, O for open, C means closing price or last price or current price. And there's only a few of those. So there's not a ton of operators. It's all very, very basic stuff. And it'll come second nature quickly if you care about these sorts of conditions. So L minus L and then -1 in brackets. And if we would apply that, we're going to see a background color whenever that condition is true. So whenever the low of one bar is less than the low of the prior bar, this chart is now notifying us of that fact being the case. So in this case, we're looking for more than this. Okay, we don't want to just know when there's a lower low. We want to know when there's consecutive lower lows. So what we could do here is put a comma and just incorporate a second condition. So I'm going to say this time L, and I'll put a -1 in brackets, is less than L -2. So this says the low 1 bar ago is less than the low 2 bars ago. So now we have 2 different conditions. In order to make the chart read for both of these, we have to encapsulate them and put the word and in front. So what this and means is that everything inside this parentheses has to be true in order for the condition to be true. So if I apply this, we're going to see some of these gray bars in the background go away because now this is a more stringent condition. It's looking for 2 conditions instead of 1. And that's what we see here. So if we just want to keep going through the process like I did in the other example, a lot of times when you're doing this sort of thing, there's a lot of copy pasting involved. It's a little easier. So I'll just put a comma. I'll copy paste this and I'll just change this from 2 and this one to 3. So when the low is less than the low 1 bar ago, the low 1 bar ago is less than the low 2 bars ago, the low 2 bars ago is less than the low 3 bars ago. That is what constitutes 3 lower lows. And that's what we're seeing here in this example. So now that I've applied that, we're seeing an immediate response from the charts. All right, so one of the cool things about the program is that, especially if you're using same timeframes like this, you can overlay the result of this test onto the chart that you're looking at the most. And that's, that really is one of the powerful parts about this program. So we can actually go to studies and we can go to the study price overlay study. Okay, we're there. Go to settings, and it's going to ask us, okay, what are we overlaying and from where? So we're now looking for a yen chart. So you can see now we got more charts open here. Just choose 6JM8. And are we overlaying the main price graph? No, we are overlaying the background color. All right. Now, if I do nothing and just push apply here, we're going to see that show up in region 2. Down here, which is not necessarily a bad thing because region 2 is a great place to keep multiple alerts. So if you don't want your main screen getting cluttered up and you just want to be able to quickly look down at the bottom of your screen, I can shrink this down kind of like this. All right, so if you don't want your main screen getting cluttered with background colors, region 2, 3, 4, etc. are great places to keep extra alert conditions. So you don't have to put these in region 1. You have the ability to put them in region 1 if you want to, but they don't have to be there. They could also be in both places. So if you were to duplicate you could actually duplicate this color background overlay like this just by hitting duplicate and then change the region on this other one here to 1 like that. So there's a lot of personal preference in here. I'll leave them both on here so that when you get a copy of this file, everybody here is welcome to have copies of all the files we're using today. You want to work backwards off them, you're welcome to do that. This is a way for you to, to use this on your own, maybe with the recording. All right. Michelle had a question about how does the charting program know how to scale charting information from a different market? What you'll generally find is that a on some of these studies that incorporate overlays, the scaling options will be pre-chosen. So for what I mean by that is that certain studies usually have a scale option other than automatic selected. So in this case, with the color background, there's no scaling problem because you're just coloring the background. But a lot of times what you'll notice, and if you go to the scale section, you'll see that the scale range is automatically chosen. So automatic means that if you have a value of, let's say, 1,000 and a value of 1 on the same scale, it can look really messed up. All right, so changing that to something like same as region is a better choice. Some of the studies are pre-filled this way. Some of them are not. So if you do find that the scaling is way off, the first thing to do is check the scale button right here. All right. Homaira, so bonds. So if you were to do something similar with bonds, you could actually right-click here on the yen chart. You could duplicate the yen chart like this, and we could actually test for the same condition in the bond market. So ZBM8. All right, so now we're looking for 3 consecutive lower lows in the bonds, which there are some examples of that. And what we could do in this case is just change the color of this test to something like, let's say, like this. So now we're getting a notification where we get 3 lower lows in the bonds. And we could actually go to our destination chart on the S&P and duplicate one of the yen conditions. Like let's do the one that was at the region 2, which was at the bottom. So I would just select this one here, duplicate it, and let's go into settings and make some changes. So in the study to overlay here, we can go down and select ZB. All right, so we're just picking a different chart number. We're doing the same study. We're going to put it in region 2, and then we get this behavior here. So this is an example of how you can start to bring these alerts off of one chart and put them on another chart. And you just have to know what the colors mean. So obviously there's going to be some personal preference there. But this is a great way to sort of pare back the amount of data that you're looking at on an intraday basis, especially if you find yourself looking at too much stuff. Okay, yeah, good. Thanks, David. That's great to hear. Usha, I have a MACD study in a different region, but I would like to have it in the main NQ chart. I'm not getting how to do it. So it sounds to me, Usha, like you want the MACD to be in the main, like the main price graph area. Is that right? Okay, that might present a scaling problem for you, but let's test that out. So let's just do that in a new chart book so we don't mess with anything here. So I'll just go to ES, or let's just use NQ because you look at NQ. All right, so here's an NQ chart, 5-minute. Go to studies. Go to MACD, like that. I don't think I have many custom settings. So here's a MACD. Here's a MACD in region 2. So it sounds to me like what you're looking for is to put the MACD in the main price graph. So how do we do that? Well, that'll be interesting, but let's put that in. Let's try to see what happens if we put it in region 1 without doing anything. Okay, so that makes sense. All right, this is the expected result. We're looking at a value where the main price graph is 6,700, but the value of the MACD is in the 20s. So the chart is now showing us both of the values. It's doing exactly what we've told it to do. All right. The only way to get values that are this far apart on the same screen without screwing up the scale is to use, I believe it's going to be to use this independent scale range, which is like this. So that is not an ideal look, at least for me. I mean, maybe it is. Maybe that's exactly what you're looking for. But when you have an independent scale, that means that these things are not moving together. Okay. Well, in this case, they are moving together, but the values are not aligned at all. So when you do this, you're still getting this behavior, but the values don't jive. So the reason why this might look silly to some of you, but so what we have seen with some of our customers is a lot of times with our clients, especially with oscillators like this, they are looking for divergences in the lines themselves, not necessarily the numbers. So this is kind of a similar thing for how many of you guys or gals have ever looked at an NYSE tick chart on one company's data feed and then an NYSE tick chart on another company's data feed and another one and wondered why they're all different? Okay, that's because the NYSE tick is not a price that's disseminated by an exchange like a futures price. It's calculated differently by every vendor and shot out in real time, so it's going to be different. But what we have found is that people, instead of looking at the values themselves, they will look at the relative value of the tick now to, say, the tick prior. Or if they look at a tick on 1,000 tick reading on one chart, and here they're looking at an 800 tick reading, it's kind of the same thing. You learn how to associate relative values rather than just the actual numerical value. So sometimes these sorts of things do make sense, but this is not how I would look at it. But I'm not you, so maybe that's sort of along the lines of what you were looking for. Maybe not, but there are some other scaling choices in the scale option. I don't know if any of these will make sense. Maybe automatic zero based. Yeah, maybe that's a little bit more like what you're looking for, where you can see the MACD more along the bottom of the chart, and then you can choose this option here that says draw study under main price graph, which would sort of put it behind the candles. So I would experiment a little bit, Usha, with the scaling options in here. I'm guessing that something in here will be along the lines of what you're looking for. All right, but you might have to mess with it a little bit. All right. Homaira, I'm actually not going to do much with the profile today. We just don't have enough time to get into the TPO profile stuff. There's a huge, it's a huge topic, and there's a lot of pre-made TPO profile charts. If everybody goes to File, Open Chart Book, and just type in profile at the top up here, you're going to see, actually, you type in 2018, you'll see one in here that says Market Profile, aka TPO Profile, and if you open that up, it'll probably look a little bit bigger on your screen, but you'll see a whole bunch of, profile for one session, split and evening sessions, all kinds of different customizable examples. So I'm sort of going to defer to that for now, just in the interest of time. All right. Another thing that I did promise I wanted to cover before I start looking for a couple of examples, and then we'll probably wrap things up here in about 20 minutes, is how to use this function here where we're getting this rectangle, and how to put this also onto the shorter time frame. So I know I just covered this last week for those of you who are here, but I think it's such a relevant topic that I'd like to touch on it. And if I just go to the daily, let's tile these on the screen for a minute. Oops, these are minimized, so they're just showing up down here. Okay, let's tile these vertically. I'm actually going to minimize these other charts here. I just really want these two for this example. So what we can do here is look at the daily chart and say, all right, I think that this area right up here is really important, like that. And I think this area right here is definitely important, like that. And then this area too is also arguably important, like that. All right, so what this is basically allowing me to do is create zones, create my own zones that I think are of relative import. And what you can do on the 5-minute is right click, go to chart settings. This is not using study price overlay. This is really just a function that is a setting on the chart, the same way it's a candlestick chart rather than a bar chart. One of the choices in the settings section here under advanced settings 2 is called copy chart drawings from chart numbers. And what I'm going to do is just put in number 1 here, because we are looking at the daily chart, number 1. We want to copy our drawings over from that chart. So I push apply, hit OK, and it's like, wow, wait a second, nothing happened. But if you go like this, you'll all of a sudden see that something did happen. And what's happening is these zones are being copied over from the daily. So what this effectively allows you to do, and again, it is not directly related to the study price overlay study, but it's very relevant in the same context, is look at your bigger time frames, establish these areas, and then paint them on your intraday chart so that as the market approaches them, you know that you're entering. Like if the market were to come up into this area, I will know that on a daily chart we're hitting some resistance, in my opinion, and I should be mindful of that. That's what the function is here to do. All right, so again, to do this, you go onto your destination chart, which in my example here is the 5-minute. Right click, chart settings, go to advanced settings 2, and then just type in the number of the chart you want to copy from, chart number 1 in my case. So to make this more interesting, let's open up another chart that's not a daily chart. So I'm just going to right click here, duplicate this one, and I'll make this one say 60 minutes. All right, I'm going to take the moving averages off of it just to, so it doesn't look confusing. So this is just a 60-minute chart. And when I do the rectangle this time, I'm going to choose what's called a different tool configuration. If you want to learn the ins and outs of what we are doing here, watch the last webinar that we posted about the charts, because we did cover a lot of this. So this is a 60-minute chart. So I could say, okay, I'm looking right here, and I'm on a different tool configuration, so I'm getting a different color response. Okay, I'm look right here, and then let's just say right here. Okay, and now I go on to my 5-minute chart, right-click, chart settings, go to advanced settings 2, and then just separated by a comma, I'm going to put now chart number 6. All right, that's this number right up here, 60 minute. So if I push apply, we're going to see, again, we get an immediate response in the form of these pink areas. So it's a really neat way to take data points from other time frames and put them on a time frame that you intend to actually focus your energy on. This is already getting a little cluttered for me. This is not how I would want things to look, but just something I think is pretty useful. All right, cool. Yeah, it's a pretty neat function. So can anybody give me a couple of ideas? Just again, we don't have a ton of time, but I would like to take a couple of suggestions or questions for people. Like Homaira had the MACD. There was a couple other people who were asking things. Yeah, George, let's do that one on an individual level. That is going to be so far outside the bounds of what most people are looking at. I'm happy to address it with you directly, though. So maybe shoot me a quick email on that, and I will create something like that for you. I don't want to stumble too hard over my own feet trying to figure that out. Okay. I'm happy to look at it, but again, it's just not the proper context. Not your fault. It's just most people won't get it. Oh, Usha, it's on our website. I'll post a link to the YouTube thing here in a minute. Okay, we have them all up on YouTube already. All right. Okay, so yeah, no problem. So there's a couple of suggestions coming through that actually are quite similar to what we've already done with the moving average. I'll show one of them. So let's start. And this is actually pretty cool, because it will show you how strange this can look sometimes, but it's actually still correct. And so let's explain what I mean by that. So here's a 5-minute chart of the NASDAQ with, let's make it 60 minutes. So here's a 60-minute chart of the NASDAQ, and let's get the MACD at it. So right-click studies, and I know I'm flying here, but I want to fit as much in as we can. So right-click studies, we'll just add MACD. Okay, I don't know why I have mine defaulted to 2 here, but I'm going to change it to 3, change it to 2 and default that. So here's a MACD on a 60-minute time frame. So if you are looking at an oscillator on a long time frame and you want that oscillator to appear on a shorter time frame chart, so if I duplicate this, come over here, make this chart a 5-minute. All right, I'm going to clean the MACD off of it. Let's just get rid of the MACD. So we're just looking at a 5-minute chart. So you can overlay oscillators from a bigger time frame onto a smaller time frame. You just have to be prepared for the visual result being a little strange looking. So here's what I mean by that. You're going to do this the same way that you would normally do. You would go to Study Price Overlay, click the Add button, and start looking for your input. So the first thing is to look up at the Study to Overlay section. We're picking the 60-minute NASDAQ, and then we are going to pick not the main price graph, but rather the MACD. And in this case, the chart defaulting this choice to region 2 is correct, okay? Because most people do want the MACD in the main price graph. All right. Now, this is an interesting, phenomenon, right? Because hang on for 1 second here. This is just definitely not what you expect when you look at this. Let me see if I can improve the look a little bit. So this is, in my opinion, the incorrect way to do it. Okay, so the incorrect way to do this would be to, I guess that's a little harsh. What I did here is when I added this, I changed the setting to match source bars to destination bars, setting to no. So what that basically means is that we're just getting the 60-minute MACD overlaid onto the 5-minute chart, but it doesn't really make sense to do this on a 5-minute chart because this is just directly from the 60-minute. You might as well just, I guess you could look at this if you just wanted a 60-minute on here, but the idea would be this bar doesn't, like this bar right here, the second one back, doesn't match this bar up here, because this is really just being copied over from the 60-minute. If you really want a true representation of this idea, you really do need to leave this option as no, or excuse me, to yes. And there's an option in here that says fill blanks with last value that can be set to no. All right, so here's what we were seeing and why it was so strange looking. When we set this to yes, what it's doing is in every blank space, it's filling it with the prior value. So fill blanks with last value, if you have it set to yes, you're getting this behavior. It could just look a little weird. It's still accurate, because with a 60-minute chart, you're getting 1 bar every 60 minutes, but on a 5-minute chart, you're getting 12 bars, right? So that means you're getting 12 consecutive bars at the same value on a 5-minute, because it's being overlaid from a 60. So if that is really distracting, you can choose this fill blanks with last value to no. So anytime you're overlaying an oscillator or another study from one time frame onto another, just remember that the default setting is usually correct. And the default setting up here is going to be match bars to destination bars, or match source bars to destination bars. That should say yes. But this option down here, fill blanks with last value, you can set this to no. It's just, remember, you're not getting that many bars. This bar is from a 60-minute time frame, so you're not getting another bar for 60 more minutes. So it definitely looks a little strange, but it is accurate. And yeah, this is what I would consider to be the proper way to do it, because you're actually letting these match up properly. All right, so that is that's one. You're going to see this anytime you are doing one study from a bigger time frame onto a smaller time frame. Kind of like when we were doing these moving averages over here. All right, so the moving averages on the daily are curved, and you can see the curvature of them and everything. But when you look at a 5-minute, they're just straight lines. All right, that's because you're only getting one. One day is however many 5-minute bars. Right, so it just looks like a straight line, but the values are going to be accurate. All right. Okay, Francisco, your question, how do I see the number of short or long contracts on a volume profile? I mean, when you add a volume profile to a chart, Francisco, by default, it's going to show you, the default setting is to show you a relative number of bid and offer volume separated by colors. All right, so when you add volume by price, now mine looks totally different because mine is coded, it's defaulting a certain way, but I guess in order for me to do this, actually, you know what? Hang on. Just so I don't have to reset all my default settings here, let me just go to one of the charts that comes with the program. So this 2018 volume profile is part of everybody's charting software. Everybody here has got this already. So if you look at a 5-minute, this is the default way that a volume profile looks. So you're getting, the bid volume and the offer volume separated by color. All right, that's a default setting. All right, now as far as like the number of contracts, I think we may have talked on the phone about this today, but if you're looking for the actual number of contracts traded, I'm not sure if you can there must be a way to display that, maybe in display volume in bars. Yeah, so if you go to display volume in bars, this setting and input here, you could say bid volume versus ask volume, and then it's kind of hard to see here because this is black text, but they are going to show up here. All right, so again, right-click studies in the volume profile study, go to settings, and then where it says display volume in bars, instead of just looking at total volume, which I think is what most people will look at, you can select bid volume by offer volume. Okay. All right, I'm going to close this chart book for now, but everybody here has this chart book, so you're welcome to use it. All right. Okay, Ed, I'm not sure about your question. I think I may have missed that earlier. So I assume you're talking about ESM 8, not 6, but maybe if you can repeat that for me and with some context, I'm happy to review it. All right, Larry, is there any way to shade areas between two moving averages like a cloud? Yeah, so There's a study here that's called, actually there might even be a moving average study that does that natively now, but if there isn't, yeah, it's called, I think, moving average envelope. No, that's not it. What you can do, here's one way to do that. So there's an option here called, let's just do an 8 and a 34. So I'll do moving average exponential. So that one's 8, this one's 34. Okay, there's another study here. So now they're both on the screen. Although it's kind of hard to see which ones they are. So let's make the first one this color. And then the second one we'll make this color. Okay, so it's these two moving averages here. So there's a study here that's called Study Subgraph Reference. Like this. You can add it. And when you go to Study Subgraph Reference, you go to Settings, and there's spaces for two subgraphs. So the first thing we'll do is the first moving average, and then the second will be the second moving average. Like that. And then if you put that into region 1, what it does is it automatically fills in the difference between the two. And then you can tweak how it looks in the subgraph section. So the way to do that, folks, if you want to shade an area between two studies, and they don't have to be moving averages, they could be anything, you add them both. And then there's a study here called Study Subgraphs Reference that you can do you put the inputs in, and then in the subgraphs, you can change the colors and so on. So that's probably the easiest way to do that. There might be an easier way that I'm just missing, but that's one way to do it. All right. Greg, is there a study that identifies pivot points as in a low with two candles with higher lows on each side? So Greg's saying again, is there a study that identifies pivots, and then he defines pivots as a low candle with two candles with higher lows on each side? So I don't know if there's a study that does that by default, but there is a way to sort of test for that. So let's do a NASDAQ chart here. So you'd have to define for me, Greg, what a low candle means. Does that mean like a down candle? Okay, so like a low candle, is that a down candle? Okay, so what you're basically looking for, this might be a little test of my brain here, so let's see if I can do it. But so the current bar has to have a higher low than the bar prior, and that bar, which is sort of like the pivot candle, has to have a higher low before it. So let's see if we can figure out how to do this. So this is one of those cool things about Sierra that you can sort of identify these areas if you know how to, if you can speak logically about the condition you're looking for, you might be able to create something like this. So that you're using like the color background study as an example. Dale says, I'll get to this, Greg, in a second. Dale says the guy looking for the cloud, is he talking about Ichimoku cloud? Well, I mean, the Ichimoku cloud studies exist, but this person, it sounded like they were just looking for the difference between two moving averages. All right. Okay, so just going back to Greg's point, kind of like how we were doing that thing with like consecutively lower lows, we were using the word L or the letter L to identify, or define L for low. So what he's looking for, it sounds like, is the current candle has to have a higher low than the middle candle or the prior candle. So the first condition is going to be that the current candle, which is let's see, where'd that question go? So the current candle has to have a higher low than the prior candle. So the L must be greater than L, -1. Oops. Okay, so that's our first condition, is that the current low has to be higher than the low prior. All right, lots of times that's true. All right, that's a higher low. But the other condition is that the low low candle with two candles with higher lows on each side. So let's see, 1 bar ago, 2 bars ago, that needs to have a higher low. So 2 bars ago, we need a higher low than 1 bar ago. Okay, there's a second condition. Okay, so let's put these together, see what we get so far. So the current low is greater than the low 1 bar ago, and the low 2 bars ago is greater than the low 1 bar ago. Okay, that's so far so good. And then lastly, the low candle, or the middle candle in this example, has to be a negative candle. So that means that the close of the bar 1 bar ago has to be lower than the open of the bar 1 bar ago. So the last condition I think here is going to be the closing price of the candle 1 bar ago has to be less than the open price of the candle 1 bar ago. That implies a negative bar. Let me just lighten this up a tad. Okay, so like this. So this might be a way to do this. I mean, this is one of the the nice parts about the program, and I don't know if I'm right on here, but the idea here is that if you were looking for certain candle formations, a lot of times if you can just speak them, you can create something that will resemble what you're looking for. So all you have to use are operators like L for low, H for high, O for open, C for close, and then be able to identify the idea that 1 bar -1 means 1 bar ago, -2 means 2 bars ago, -3 means 3 bars ago. So Greg says, yeah, thinks it's a good start. I'm sure it's not perfect, but if you can start to talk through it, you can probably create something that fits. All right. But that is probably where we will have to leave it here for now. I do appreciate everybody coming. I know that we were kind of like hodgepodging here, but I did want to take some questions, and I know we didn't get to all of them, but I'm kind of out of time here today. So we'll get this up on YouTube within a day or so. I'm going to rename and save all of these chart books. So if anybody has questions or wants access to them, just email your representative in our office, and we will be happy to send them to you. It's a great way to learn. You can use the recording in conjunction with the chart files and go from there. So thanks again for coming. Much appreciated. We'll see you next time. Thank you, everybody, for your time today. And everybody have a great week. Keep your head screwed on nice and tight. Sounds like it might be a wild one. All right? All righty, folks. Thank you very much. We'll see you next time. All right. Bye-bye. All right, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thank you, everybody.